Good morning, good evening, good afternoon. How's everyone doing? My name is Naveen Prithyani. For those of you guys who do not know me, I see many of you guys were already here from the podcast that we did prior to this webinar. If you guys are watching this webinar as a recording, do not forget that if you want to listen to the podcast that we just did talking about indicators, the link will be below this video. Okay, the link will be below this video. But moving forward, our goal in each of these webinars is, even though we talk about a topic that might be a theoretical topic, I want you to always take something away and learn something from it. I don't mean by learn something for like 2 minutes and sit in a webinar for 60 minutes long. I want you to learn as much as you can in the whole 60 minutes, time and time and time again. So it's always a pleasure to have you guys here. And again, I want to, truly say thank you for taking the time off, for being here. I know a lot of you guys make sacrifices to be here, whether it's with time or with work or taking time off to be here. And so I want to, say thank you for doing that. And, we don't want to let you guys down. All right. So important topic today, indicators. Okay. We all love indicators. We all started with indicators. We all have some history with indicators. In fact, some of us in this room right now are probably still hanging around indicators. Not hanging around indicators per se, as in I use indicators to sort of help me make an informed decision, but I'm actually trading based on indicators. That's dangerous. But we're going to talk about why is it dangerous? Like, it doesn't have to be, the webinar doesn't have to be indicator bad, non-indicator good, webinar over. No. Let's talk about it. I want to go deep dive, go deep into what is an indicator, how does it work, how can we actually use it, and what are the ones I like to use? What are the settings I have on them, in case that's a concern that everybody has? And then how do we look at them? Does that sound good? All right, so let's talk about indicators. Let's talk about the effectiveness of indicators. Let's talk about, can we use indicators as a trading strategy? And we'll even touch base on, are indicators even profitable? Okay, so let's talk about all of those things. Now, as we just discussed earlier, and some of you guys pointed this out even into the podcast, we said indicators report the past. Whenever we see a chart that's doing this, and then prices are flying, do we not all at certain points say, oh man, I wish I got in here, I wish I got off here, and I wish I can make that profit? You guys agree? We have that feeling at times. So let's keep that feeling, and let's say whatever that feeling is, we're trying to accomplish that, because that is, let's say, 20 pips. And if that 20 pips, we start dreaming about it. If that 20 pips, if I did that with one standard lot, that'd be $200. That's good money. I'd like to do that, right? I'd like to do that. Okay. Sorry, I did it the other way. It'd be $10 a pip for one standard lot, approximately, right? But then when you have an indicator, for example, a moving average, let's start with the basic one, an MA. Okay, an MA is short for moving average. Okay, that's what it stands for. Now, if the setting of the MA says 10, what does that mean? Do you guys know? The period of the setting says 10. The word period, okay, means how many candles. It means how many candles. So if you are on a 1 hour chart, if you're on a 60-minute chart, and your MA settings are set to 10, it will use the last 10 candles and give you an average of that. If you set this period to 100, it will use the last 100 candles, or 6,000 hours, and give you an average of that. Making sense? Sorry, not 6,000 hours, 6,000 minutes, sorry. Okay, let's take it a step further. Now, if the prices are doing this, what do you think a 10 period moving average will say? Well, how will the indicator look like? I'm going to make it in the color blue. So if the 10 moving average, okay, 10 setting moving average, 10 MA on your screen is here, and this has 20 candles inside of it, how will it look? The MA would look like this. It would be something looking like that. And then suddenly the price goes up. It goes bam in 2 candles, just 2 candles. Based on the last 10 candles, how would it look, the moving average now? If I say based on the last 10 candles, it would go up a little bit. So by the time the moving average tells you it's going up, is the move gone? This is something you have to understand what an indicator does. So that feeling that you had of, man, I wish I can buy at the bottom, sell at the top, can't be done with an indicator, because the indicator tells you that information a little bit too late. And now you understand why it tells me too late. So far, so good? Okay. So what happens is, to solve that problem, the next journey happens in your career where we add multiple indicators. Multiple indicators, which means I want a 10 MA, I want a 40 MA, I want a 60 MA, I want a 96.7 MA. You know, you're using all kinds of stuff. Okay, all kinds of stuff. Along with that, I want an RSI, I want a MACD, I want pivot points, I want a Fibonacci tool, I want a Gann fan, I want astrological events, all that stuff. And suddenly you start to realize, I don't see the price anymore. Okay. Further down into your career, as you do this, you start to realize, what am I doing? How many of you guys have reached that stage or have passed that stage? Okay. If you've passed that stage, say the word passed. If you're at the stage, you can say me. Like, you guys are at that stage where you're like, what am I doing? It's so irritating. Okay. So it looks like half of you guys have passed it. Half of you guys are currently at the stage where there's constantly of like, what's happening? What's happening? Okay. Let's talk about it a little bit more. So if we know the indicator is reporting the past, and we want to technically predict the future, because if the move is happening and whatever this move does after, we want to be in it. If we want to be in it, don't we need to be in the move somewhere around here, approximately? That means we need to have some level of prediction, right? If we need some level of prediction, we cannot use the past at all. Okay, because an indicator will only report what has already happened. So I don't want the price to get up to here and the indicator says, you must buy. Like, I don't want to buy up there. That's too high. So far, so good? So then, don't we move on from our indicators and we move on to, all right, you know what? I don't need to do indicators. So what do I need to do? So I Google it. And as we Google it, what do we see? What is the next best thing outside of indicators? What does the career path take us to? The career path takes us to the next thing, which is PA, price action. In price action, we approach the next stage of our career, which is the illusion of price action masked with patterns. Patterns. What's a pattern? Patterns are, you see this? This is a buy structure. You see this? This is a sell structure. You see this? This is a range structure. And then structure this, structure that, structure this. We get stuck in patterns. Early stages of a trader. Early stages of a trader. Yes, head and shoulders. Okay, cup and handle. Okay, cup and handle, triangles. Okay, so what's basically happening is you now have become the indicator, right? So for example, price is going up. Can you guys tell me what this structure is? What would you call this structure? It's a channel, right? Higher high, higher lows. It's a channel, right? So it's like, okay, it's a channel. Channel will give you a sense of predictability, just a sense, a glimpse of it, that this may hold again. This may hold again. So now we're away from indicators. We've now moved into patterns, and the pattern is getting me closer to, hey, it worked. Hey, I like this pattern. I love this structure stuff. Structure. I love it. And then it does this. Oh, I don't love it. I don't love it. I bought, but it didn't happen. Because for me to know it's a channel, I need at least this much information to pass to know it's a channel. Therefore, I'm late again. Ooh, I'm more evolved in my knowledge now. I'm back to that point of, I went from indicators to pattern, or price action masked like a pattern, where I have personally become an indicator now. Thank you, Mr. Indicators, passing that gene on to me. To now, I'm confused again. It's like, I'm still late. I'm still very late. So now what do we do? Now, I see some of you guys saying, next step is discovering Urban Forex. Right? Yeah, that's a shortcut. Okay, we all like shortcuts, but that's a shortcut. I just want to know what happens next in your evolution. Okay? Okay, what happens next? So what happens after that is you start to say, if I put indicators aside, if I put patterns aside, if I put price action aside, which is nothing but a beautiful name for a pattern, if I put all those things aside, I need to understand one thing. How does the market operate? If I don't know this, I am literally wasting my time. And if you are teaching other people, by God, you are not helping them at all. Please be careful. Okay? You might have the right intentions, but you're not helping anyone. You're just doing more damage. Okay? So how does the markets operate? So let's begin. Shall we answer those questions? Understanding issue number one. Okay? Issue number one. Something that a book will never teach you. Humans. Okay? The issue is not humans. I don't mean like get rid of all humans. Like this is not, Tyrant 101. I'm talking about how human psychology. Maybe I should put the word psychology in it. Like human psychology, right? This is not Making a Dictator from Netflix. Okay, so human psychology, how does it operate? How does it operate? Okay, so let's talk about that. Now, when prices go in a certain way, okay, we as human beings, we have a tendency to follow. Because we are trained at a very young age to have very low confidence. Okay, somehow or the other, that confidence just drops. And we feel, I must go to a college, otherwise, blah, 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 fill in the blank. I must go to a good school, otherwise, blah, blah, blah. It basically means I must do something. I must something, whether it's school, college, education, degree, career, promotion, otherwise, insert fear into this area. Insert fear. Okay? You've had, how many of you guys had parents or know of parents who says, you're going partying? If you're going partying, that means you must probably do drugs. If you're doing drugs, that means you must probably end up on prostitution. And if you're doing prostitution, you must probably end up dead. Like they take it that far. I've had parents like that. It's like, if you're going partying, that means end of the story, you're going to die. Right? You guys had families like that? So there's a lot of things around us that sort of like bring our confidence level down where we're constantly surrounded by fear. We're like, oh, you know, don't do this, don't do that. If you do this, death is the end result. If you don't do this, death is the end result. Like there's constant fear of, okay, you know, if I cheat, I'm gonna die. What? If you cheat on your math test, you're gonna die? Yeah, because if you cheat on your math test, you're not gonna graduate. If you don't graduate, you won't get a good job. If you don't get a good job, you'll end up doing drugs. If you don't end up doing drugs, you'll become a prostitute and then you'll be dead. Whoa, I never thought that far. Like, you've heard of that stuff before? Right? Okay, so fear-based tactic. So human psychology is a following-based psychology. We love to follow. We love to follow. So let's understand that first, because that's who is trading the markets. Humans are trading the markets. So far, so good? All right, here we go. Here we go. Let's talk about this. Now, when the prices are going down, 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 if the prices go down, all we hear about is the negativity. Very few people think about the positive from this. Okay? So when this thing is going down, what is the word people will say? Give me some keywords that people like to say in this thing. Let's say this is a certain stock. Tell me a stock name. Give me any stock name. Okay, Apple, GME, Tesla. Okay, let's say Tesla. Okay, say Tesla. If it's going down, what are the words they will like to use? Uh-oh. Oh no. OMG. I knew it. Okay. Musk has lost his mind. Okay. All kinds of stuff, right? End of the world, blah, 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 blah. Tell me how many people actually look at this as, ooh, thanks for the discounted price. How many people actually think like that? It's not normal to think like that, right? No one thinks like that. Now, have you guys experienced the outage yesterday when Facebook dropped off? Facebook, Instagram, you know, all those services has dropped off. If you look around the news, what is the saying? Oh, that's the end of it. Social media, they're going to be in trouble. That's it. Zuckerberg is out the window, and all kinds of stuff, which belongs to the left-hand side of things, which means what will the people who own the Facebook stock do? What will the people own the Facebook stock do? They will sell. Notice when the sell happens. Here, the sell happens after the fact, not before, not early. They're not here early. Okay, sorry, this is now FB. It happens after the fact. Why? Because the news has reported it, has reported the past like an indicator, and then now we jump on the bandwagon and saying, me too, I will sell. So far, so good? Can we flip it around now and you tell me the human psychology on the other way? Okay, give me a company name, any company name. Okay. Neo. Okay, Amazon. Let's do Amazon. Okay, Amazon. Prices are going up, going up, going up, going up. Now the news reports it right here. News reports are right here. Jeff Bezos, richest man on the planet. What's the keywords people are using at this stage? What's the keywords people use? It's a great company. It will go up. Jeff Bezos, he knows what he's doing. Did you see how he's cut his hair? Fantastic. He knows what he's doing. You know, sparkling shiny. He's got this. He's got this, right? People start looking at this as it's going to go. It's going to go and it's going to keep going because it went before, so it will go again. So the buy happens here. The buy happens here. So far, so good. Now, are we at the right page? Do you guys all agree we're on the right page of how human psychology works? Okay, it's indicator driven generally, basically. Whether that indicator is called news, it's called neighbors, it's called MACD or moving average or anything, we are indicator driven because we like to follow. Right? What we're doing is we're reverse engineering everything that's happening. We're not basically saying moving average is bad. No. I'm trying to tell you, open up the mind, find out what is actually happening. How does the markets actually operate? So now tell me one thing, all those people who are buying up here, if the prices go down and they say, man, the government, the big boys, Wall Street, man, they always do this to me and this and that. Is Wall Street actually doing this to you? Are they intentionally getting into the office and saying, you know what, let's make sure people follow it at the last minute? No. Yeah, they can rig the media. Okay, I see one guy saying they can rig the media. Fair enough, they can rig the media, but we, at the end of the day, we're the ones who make the decisions. It's our greed or fear that takes the best of us. We are a following-based people. We're following-based people. So far, so good? Everyone on the right page? So how do we overcome that? How do we become that person that buys here or sells here rather than becoming a part of the herd? That's the golden question. Now, I want to ask you one thing. What's my structure here? What's my structure? Channel. Okay, news comes out saying this stock is good, or this whatever is good. This is Sensex or NASDAQ or anything. It's going to be good. Well, you want to buy, right? But it's high. So if the prices go down, is anyone really selling? Not yet. No one knows about the sells yet. And it goes down more. Is anyone selling? Nah, maybe some. Is anyone selling? A little bit more. Is anyone selling? A lot more. Now, can you tell me what is this structure? A trend. Okay, so let me come out to you in hindsight and be like, of course it's a sell. Can't you see it's a downtrend? Don't you want to slap that guy really hard? Like, come here, let me show you my 5 fingerprints on your face. Right? It's like, come on, you're like Mr. Hindsight. What are you doing? Like, I can do that too. My goal is, how do we get here? How do we get there? So we're away from being an indicator-based person or personality. Does that make sense? So learning a pattern, whether it's a channel or a trend or a range or anything, that's good knowledge, but it's not what's going to make you a trader. Because it's just another indicator, right? Okay, good. So now we're opening the mind a little bit. So we open the mind about indicator. Indicators are lagging. Okay, no problem. Some of you guys might be there. Some of you guys have passed that stage. But the next stage is price action. And in price action is nothing but you becoming an indicator and drawing all the stuff on your charts and saying, I see that pattern. But that's an indicator as well, as we just talked about. So can we take it further down your career and saying, good, you've done that. There's nothing wrong with that. How do we get better? Because that's the main goal, right? Shall we move deeper? Okay, all right, let's move deeper. It's like, no one's saying yes. Okay, and then all the yeses came. Okay, now let's talk about this. So instead of going structure and going crazy about structure itself, because it's just a pattern, right? You want to understand, where do I position myself? Okay, what are the things I require? I require a discount, which is a good price. I require a potential move, and I require early. I don't want to be in the move too late where it's too obvious. So Captain Hindsight says, look, it is a buy. I told you. No, I don't want that. I want to be early. I want a decent move that it can still have a nice move in it. And I want a discount. So far, so good. So this is how I want to position myself by answering these questions. Now let's take a look at this. Prices move up. Prices come here and then they collapse. Would you say this upward structure has been damaged? What if I told you this is still to be bought? To a normal person, they would be like, what, you're out of your mind. You're not going to buy that. The whole structure, look at this. You see, if I draw a trend line, it's been broken. Right? You were supposed to sell here. Like, it's been broken. Why are you even thinking about the buy? So one thing is to identify the flow. Okay, identify the flow. Which way is the market going? Now, before we do that, how many of you guys in here are in Forex? How many of you guys are in stocks? Okay, I see a lot of you guys are in Forex. Can you write the word stocks if you guys are in stocks? Stocks, indexes. Okay, maybe even cryptos. All right, so I see a lot of you guys are very mixed. I see a lot of you guys are in Forex, and then some of you guys are Forex cryptos, some of you guys are Forex stocks, Forex index. Okay, so mixture of multiple things, right? And futures as well. So the key differences about a stock is, you know, if it's, let's say Apple, just like Apple, one company, not the fruit. If Apple is a stock and you're looking to trade it, Apple can do this and be perfectly fine. It can go in one direction and keep going in one direction and keep going in one direction. A crypto can do that. An index can do that. It can just keep going, keep going, keep going. A Forex pair cannot do that because it is not one currency. It is two currencies put together. It is one economy against the next. If you go one direction nonstop, you're going to bankrupt the other economy. So then how do you make any money? So let's talk about that. Shall we talk about that? Let's go deeper into how. How does the market work? If you understand this, I've already solved 50% of your problems. If you can understand this, okay? Shall we go deeper? How does the market work? So whatever you're learning it, good. Everyone has the best of intentions, but you need to understand if you don't learn the right things, you'll do a lot more damage than good. Okay, so be very careful, very, very careful. So how does things operate? In Forex, you have a pair. Let's say Euro USD. Euro USD. If the chart goes up, what does that mean for Euro? That means Euro is strong. It's good. If the chart goes up, just like it's drawn, what does that mean for USD? That means US dollar is weak, right? This currency pair, if it goes up, that means Euro's doing good, dollar is doing bad. Now you tell me, can this sustain too long? Is dollar just going to sit back and say, you know what, it's fine. We'll just, we'll move to London. You know, we'll sorry, not London. We'll move to Germany. Okay. You know, Brexit, can't move to London. Right? It's not going to happen. It's not going to happen. But have you ever noticed one thing? Let's say you're dealing with, let's say, New Zealand USD. And then you open up a higher time frame chart, like a weekly or something, and you see the prices from here all the way to here. It's like, wow, 2,000, 3,000 pips. So then a buys and sustainable buys should work, right? All right. The thing is, this happens. That is correct. It does happen. Overall, something can be longevity like that. Forex moves on average 1% a day. You have to remember this. It moves on average 1% a day. So you know how this move happens? That happened in 2 years. It takes 2 years to do this, but how it happens every day is okay, sorry, I'm with the sound effects, but you get what I'm doing, right? Okay. That's how it gets up there. That's how it gets up there. So far, so good. You with me? Everyone with me? Now, if there is a price like this, and you take a buy, and you want the buy to do this. Is that normal? Good. I want you guys to all answer this and really be honest with yourself. Is that normal? No, it is not normal in the Forex market. You need to understand what you're dealing with. It is not normal. So to come into this industry and saying, can someone teach me how to grab this? Can someone teach me how to do 100 pips per day? Can someone teach me how to do a lot of pips? You're not learning some techniques. You're already learning a losing game. It's not whether the techniques are good or bad, or the mentor has the right intentions or the wrong intentions. You're already learning a losing game to begin with. Because the how is wrong. That's not how it operates. So far, so good. You guys have some aha moments right now? At least at a basic level, aha moments. So any one of you guys, forget the mentors and Instagram people. It's their job to make sure these things look appealing. But for you, be honest with yourself right here. When you see movements like this and you're like, I wish I can sell this, but you don't do the sell and the sell does this. And you feel, oh man, I knew it was a sell. I wish I had caught that. How many of you guys have that experience when you're like, oh man, horrible, horrible, horrible. Now, let me explain to you, next time around, you do sell it and prices do this. You're in profit, stop loss. What happened last time? Why? Happens? This is far too common for people, but they don't want to accept that this is normal. This is abnormal. They cannot accept it. But yet everyone aims for this. You can't make that into a consistent career if you're aiming for that, because it's like going to a 7-Eleven or a convenience store and saying, give me a lottery ticket. Give me a lottery ticket. Give me a lottery ticket. You're going for the wrong strategy. You're going for the wrong technique. The whole market doesn't even operate like that. So you're aiming for the wrong thing. Make sense? Shall we go deeper? All right. So we're 42 minutes into the webinar. How many of you guys can say you have learned more than 5 things in this webinar already? Yeah, good. I'm glad. All right, let's push it further. Okay, let's push it further. We're trying to solve how does the markets operate. And once we understand that and we're like, got it. Now we need to work on how do we position ourselves? Because we know by doing indicators, okay, we didn't know, initially we didn't know, so we went through that route. Okay, fair enough. I didn't have anyone showing me that indicators are wrong, so I went that route too. There's nothing wrong with that. Okay, so now we move further. Let's see, how do we position ourselves? So prices are going down. Okay, let me do it this way. Let's say London opened yesterday. Okay, London market opens. And as London market opens, it goes starts going up. Okay, sorry again for the sound effects, but just trying to make it more interesting. So London market takes it up. Okay, so you're like, wow, look at that power. Yeah, fantastic people. Very nice. Okay, and then throughout New York, prices do this. They don't really do much. Nothing happens. Asia opens. Okay. Dead hours. London opens again. Now you tell me one thing. Will solving a pattern work? Because can I ask you guys one thing? Oh, I can say, I'm going to use this word, okay? I'm going to use this word. Bro, it's an uptrend, bro. You should buy it. But can I not easily say, bro, it's a downtrend, man. You got to sell it. Bro, it's a downtrend. Sell it. Bro, it's a range. Sell the top, buy the bottoms. Bro, it's a range. And then finally, bro, you missed it. What's wrong with you? Bro, you missed it. Bro, why are you crying? Right? So isn't that a very common theme that happens? Like, so it's what we want to understand is, how do I position myself? What am I doing? What does this all mean? So let's clean this up a little bit. Let's take bro out of the equation. Okay. Let's remove bro out of the equation and says, okay, I don't need bro. I'm going to do this myself and I'm going to figure this out. Okay. All right, here we go. Here we go. London has a move up. Very, very strong. Now, I want you to tell me one thing. As London opens, do you think people are in the office trading heavily? Okay. Have you ever seen London markets are open? It's not a holiday, but no one is trading. Has that ever happened? London is open and everyone's like, you know what? We're just going to drink tea. We're not going to trade. You know, it's not a holiday. It's a working day. Banks are like, no, I don't feel like working today. Restaurants are like, yeah, close the restaurant down. We're just going to have scones and tea, you know, and crumpets. And one guy said, don't forget the crumpets, right? It doesn't work like that. It doesn't work like that. It means they hit it. They hit it and they hit it hard. Now, the question is, interesting, whether it was highly activated through a news event, it just means whatever the case was, whether the news was positive or negative, they have decided that's what they're doing. And for us, it's like, interesting. I get it, but I don't want to buy there. I don't want to buy up there. It's too high. It's too high. I'm going to change the color to blue so that way we are now more focused. So I don't want to buy up in these areas. I don't want to run after it. So in the position, what is the one thing that we like? Discount. We want a discount. Give me a deal. Okay. So what is a deal? Like, you are seeing this and you're like, I want to be part of this movement, but not up there, man. I don't want to buy high and sell higher. That's really hard to do. Give me a pullback where I know the price is discounted and I'd like to buy it. But where in this piece do I buy it? Isn't that a challenge? Where do I buy it? And the next piece is, what if the buy never comes back and it goes down? Okay, what was the next piece after the discount that we said to position ourselves? You guys remember? The potential to move. Which means, is this guy still around that even after a discount, they'll still go back up? We must solve for that. And then our discount is worth it. Otherwise, all that's happening is price is just crashing and we're positioning ourselves for no reason. Right? Like, we don't want to do that. We want a discount, which means price still wants to go this direction, but prices are just getting cheaper. Okay, you're finding a good deal. So far, so good. You guys with me? Now, in all these processes, you are now looking at this as an interesting way of during New York, that was this portion. Nothing really happened, not much volume or anything like that. They were trading, but they were happily trading inside this little congestional pricing. They're happy. They were doing business and business was being fulfilled. Someone sells at $1, someone sells at $1.50. They're like, yeah, sure, I'll take it. There was no out of balance. Everyone was happy. That's what a range is. It is equilibrium. They're happy to do business in that small price range. Later on, as they leave the office, Asia opens and Asia takes the price down a little bit. Okay, Asia takes the price down a little bit. Now, Asia is not so active. Not the way London is, not the way New York is. Now, as you're getting ready to look for London open again, where all the activity comes back, tell me one thing. If the market is not active, doesn't matter if you have a range or a channel or anything. You can have the best pattern, the best strategy, the best bro sitting next to you, if the markets are not active, the big boys are not around, you're not going to get a movement. So there's no point of being overly obsessive over an indicator trading strategy or listening to bro, right? It won't work. It won't work. So around these prices, you're like, all right, I want to see if London comes back. As the Londons reactivate some power, you can forward think ahead like, all right, I want to buy with the London buyers if they actually want to buy it again. So you're trading the next day using the previous day's information saying, hey, they feel like they're still around. I feel like they're still around. I feel like they're still around. Volume will assist you with some of these things that will tell you, hey, here we go, let's party. The other thing that's going to tell you, when I buy, can I take it up really high? 200 pips? No, because remember, from New York, Asia took it down. So perhaps that's where you stop. Asia will probably, that area where they took it down, someone activated the prices so hard that prices dropped. That's your exit. Okay? If you are good at doing this consistently, you won't need this type of requirement because that does not exist. It's not normal. If you're looking for that, you're going to get 2 trades a month, 3 trades a month, and then good luck if you miss it. Your FOMO will be so high if you miss it. Now, if you explain this in this way to a normal person, he can catch this trade. Now, God forbid you explain this to a person who does Fibonacci. Let's say it's bro, and bro is doing Fibonacci. I will tell you one thing. Bro is going to say, don't you know this is 61.8% retracement? That has to be a buy. What is wrong with you? Oh my goodness. It's it's hindsight all over again. It's like, it's hindsight. And they're like, well, why didn't it go from 50%? Well, 50, it doesn't go from 50%. Sometimes they want to do 61.8. You got to be ready for that. Really? That's your answer? Really? It's like, so I guess you don't trade for a living. Like, come on, right? So you have to understand how the markets work. Position yourself based on that. And then a pattern trader might say, oh yeah, I knew that. It's not about knowing it. It's about, can you do it? You guys feel it? Like, you guys feel the difference in the knowledge level of, can I actually do it? That's more important. Can I position myself at a good price so I can exit at an early price rather than I enter here and now for me to make any money, I need prices to move? How am I going to get through all of yesterday's New York that's so thick? They're not going to let me through. So if I chase it and I enter this high, I don't have any space to make money. So that's not a good position to be in. You're positioning yourself already incorrectly. Okay? A lot of your good trades will be a buy in a downward look, a sell in a upward look. Those are your good trades. Those are your good trades. Okay? So far, so good? Everything clicking? Click, clickety, click. How many of you guys here are from my urban, blah, 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 blah. Hold on, let me open this up so I can see this properly. Okay, I'm gonna show you guys something cool. You guys wanna see a trade I am in? Yeah? So let me show you something here. How many of you guys know about the Aussie Yen trade I'm in? Okay, the Aussie Yen trade I'm in. Look at the position of where the buy is taking place. Look at the positioning of where the buy is taking place. Prices jump up. Am I buying up here? No. I need prices low enough so I can sustain a buy. I can sustain a buy. Does that make sense? Okay. Now, without even going into all the details of, how exactly I did it, but That's the core principles of how to trade. It's not, you see that channel broke, obviously it's a buy, bro. No, man, like, no, please. It's not that straightforward like that. It doesn't work like that. Okay, I can't do this and saying, you see this uptrend? Yeah, of course that's a buy. Well, that buy failed. Why am I buying? Why am I buying? You see that? So it's understanding these concepts. Now, one of the things I wanted to point out to you guys was the answering of the question of, well, what indicators do I use? So let me show it to you guys. There you guys go. So I have multiple EMAs on my screen. Okay, moving averages. So I got, you see this one? I got 1, 2, 3, and 4. How many of you guys are having a tough time seeing it? Yeah, some of you guys saying can't see. Yeah, that's the whole point. I don't want to see it so clearly because I only wanted to use it as a reference point. I don't use it to trade or anything like that. I kept it very light in color, very light in color. I'll zoom in a lot more so you guys can actually see it. Okay. All right. These are the 3 or 4 colors. So the numbers are, I have a 10, I have a 20, I have a 50, I have a 200. Now, if you ask me why those numbers, round numbers, I like them, they're cool. Last 10 candles, last 20 candles, last 50 candles, last 200 candles. I just want to know where the big flow is, where the medium flow is, where the temporary flow is. That's all. It's just reference. It has nothing to do with, and then if we do this to the MAs, I'm going to take action. It's not for action taking. It is for reference points. So far, so good? Does that make sense? Now let's talk about the other one. Now on the right side of my screen, you'll see all these claws coming out, right? It's like, what's all that stuff that's coming out? It's like, aren't candlesticks enough? You also need stuff pointing left to right? Like, what's wrong with you? No, what these are, it's called volume profile, okay? That is this one, VPVR. Okay, this is visible volume profile. What that means is whatever's on my screen, it shows me in that screen space, where is the highest activity? Where is the highest activity? And the red line shows me point of control, which means it spent the most time at this price. You can see it gets high here. If you look to the left, you're like, oh, yep, I can see how prices are fiddling around with this price. I see this price is important, and I see nothing on top. So far, so good. So it's just again, it's on the side. This used to be this wide until here. I kept it a little bit thin. Like, don't distract me with this information. I just want to know where's all the high activity, and if I'm above the high activity or below the high activity, so I know that there is trouble if I'm going towards the high activity above me. If the high activity is below me, I am leaving it. I prefer that. I left them behind. Does that make sense? Now, do I use it to trade? Absolutely not. Absolutely not. Absolutely not. Now, on the bottom, let me show you what's on the bottom here. Let me bring this colorful monkey up. This is relative volume. You see all these colors that you see that looks like a Christmas day? You got the red, the green, the oranges. What this is, and you got some gray colors. What this is called relative volume, okay? Relative volume, what it does is, because Forex has 3 different sessions, right? You got the London session, you got the New York session, right? And then you got the Asia session, right? So if I just do a normal volume like this, like that, if I just do normal volume like that, then I see, ooh, look at this high volume here. Ooh, look at that high volume there. But I will ignore these little ones. But that's pretty high for Asia. But this might be New York, this might be London, where they get the most amount of volume. So I don't want to get distracted by the little ones and ignore them because they're below the average. So what I do is using the RVol, which is relative volume. Where'd it go? This one? There it is. What I do with this is, this tells me if it's gray in color, That means at this time of the day in the past, we are below the average. At this time of the day in the past, we are above average. Green one means at this time of the day in the past, we are extremely above average. That tells me, why is there so much activity at this time? So do I use it to trade? Maybe this one can have a little bit more weight on my trading, but the rest, not at all. Not at all. Okay. So Heather, you're asking what indicator is that called? It's just called relative volume. If you look for the word RVOL, RVOL, it's called relative volume. Sometimes it distracts me. I just use a normal one because the colors just sometimes jump at me. So RVOL, right? But it stands for relative volume. If you don't find that exact abbreviation, you can type the words out, relative volume, maybe it comes out. Okay, so red is just a little bit higher than normal. Orange is a bit higher than normal. Green is very high than normal. It's like a traffic light system. So far, so good? Does that make sense? So I also use indicators as certain tools to give me some guidance of, just as an overview, but not as a prediction mechanism to enter a trade. I just needed to know, I want to wonder if I'm buying right now, is the overall flow up? Cool. And then when the sell comes in hard, I'll let everyone sell. I want to buy it. That keeps me in check and saying, all right, you're going with the flow. You don't need to keep switching time frames to a daily chart, to a weekly chart. That's why I got all the MAs here. So I don't need to keep bouncing around every time frame. Just give me a brief overview of what's going on. So I know bigger picture is this direction. Got it. That's it. That's what the MAs are there for. Does that make sense? So Rosario, you have a very good question. You're asking about RVOL is above normal compared to what? So in my settings, I have 30 period. So what 30 period means is at this time of the day, in the last 30 days, the average was higher. Because it's below the average, it's gray in color. Okay, Adam, yes, RVOL is very important in the stocks as well. You need to know if you have elevated volume in stocks, that means today can be a busy day for you. Okay, so in stocks is very important, very, very important. You want to be where the action is, right? You don't want to just mess around. You want to be where the action is. Okay, how many of you guys can say today you learned something and it makes sense? So those of you guys who are in Urban Forex, okay, obviously you guys saw the polls. A ton of you guys are already part of the Urban Forex family, and you guys are already here in the webinars time and time again, which means we have a very close-knit community, But those of you guys who are not, can I honestly ask you one question? Did everything I say make sense? Did it help? Did it move the needle a little bit towards, I've been doing, doesn't matter the technique or strategy, I've been doing it wrong. Okay? So if you have someone point you in the right direction, and even give you all the techniques laid out properly, instead of sending you down the path of indicators or sending you down the path of structures and price action and all this stuff, won't you have a better overview on what's to come, how to deal with it a lot better? So what we've done is at Urban Forex, the starting point at Urban Forex, we have something called the Mastering Price Action 2.0, okay? What I'm going to do in this webinar, if you like the way I teach and you want to, learn my techniques, how I do things, how my traders in my prop firm do things, you can join the Mastering Price Action 2.0 free of cost for a free trial. You can pick it up today. The link is www.urbanforex.com/free trial. All one word. Let me type it in for you guys here. Okay. www.urbanforex.com/free trial. Okay, did you guys see that? Okay, so what it is it's an 8-week long program where I release the information week after week, where I teach you guys what to exactly look for and what things you need to pay attention to make sure you're in tune with the markets. So every week you'll be getting lessons. These lessons are for you to keep. They never expire. This is not a subscription or anything like that. It's a one-time thing. So you get lessons week after week. You can study at your own pace, but every single day you get live daily examples coming your way saying, you know what you just learned? Here's an example from the market. You know what you just learned? Here's an example from the market. If you study 2 months later, you still have the examples. Along with all of that stuff, you have access to support pretty much 24/7. Okay, we have traders from all around the world willing to assist you and answer any questions that you may have around the stuff and the material you're learning. And to top it all off, we do a private webinar, just like this one, but closed doors, where I feel more relaxed, more open to talk about techniques and some of the secrets that we share with our members only. So if you want all of that stuff, obviously you can pick it up again at urbanforex.com/free trial and just see for yourself. Just see for yourself if this is the route you want to take, if you want to start your trading career with Urban Forex, and let me guide you step by step on how to do it. Okay, the whole goal is to make sure you learn something and no time gets wasted. No time gets wasted, because a lot of the stuff you're probably going through, I've gone through it myself. I know how painful it is. I lost years and years going through indicators and all that stuff. It took a long time for me to come to a self-realization and come out of it, to just end up in price action and getting stuck in the patterns, and then another couple of years there before self-realization, and then I'm like, what am I doing? This doesn't make any sense. And then little by little, here we are, 10 plus years later. Urban Forex has been around, what, 12, 13 years now. In fact, this month is our anniversary as well. We'll be announcing that it is our anniversary this month. So you'll get an email. All of you guys will get an email. I hope you guys can celebrate with us. We're one of the few firms that have survived more than 10 years. Within first 2 years, most firms bankrupt. First 5 years, firms bankrupt. We've crossed 12. We've crossed 12. Okay, we've crossed 12. So we've been around for a very, very long time. Been around for a very, very long time. Okay. All right, guys. So I look forward to seeing a lot of you guys inside Urban Forex, into the private webinars and members area. Thank you all for making the time to be here. As always, this has been fun. It's been a lot of fun. I always love doing these webinars. I look forward to seeing you guys again in these webinars as well. Until we get into the next webinar, which is in a few weeks, I'll see the rest of you guys inside Urban Forex. Thanks a lot for coming here, guys. Until next time. Cheers. Bye for now.